Old Mutual was founded in 1845 in Cape Town and is a global long-term savings, insurance and investment group. It has a market cap of 131 billion rand and assets under management of around 380 billion and is now headquartered in London. It has a price to earnings ratio of 16.4 and a dividend yield of 3%. This is obviously one of our heavyweights, and you can see the downward trend of late from a share price perspective. But Paul, this one has done all the right things of late.
Yeah, it's done very well since the near-death experience it had in 2008, where it was caught with global exposures, with a US life operation which was underfunded, and it had some very nervous moments. But, you know, it's gone from 4 Rand to 30 plus and is now a little bit softer, but has done very well, as you say, in recent years.
A value manager's dream if you had picked it up at that 4 Rand level.
Yeah, look, and Julian Roberts has done well to kind of stabilize the ship. But let's just go back a step or two or three. So, you know, founded and as a mutual organization, built itself up just because it rode the back of the sort of emergence of middle classes in South Africa and the modernization of South Africa's economy. Then it starts owning all sorts of industrial assets. Remember back in the day when Old Mutual had a big investment portfolio of South African industrial shares, kind of got out of those and decided to go global around the time that it demutualized. And under the leadership of Mike Levett, remember him, it went to London, it started buying businesses all over the place. So it just about had...
It used to be the prime example of capital misallocation.
Well, it kind of was caught with all of its sails unfurled when the wind suddenly came from the front in 08, 09, because, you know, global markets having been very receptive to emerging market financial stories suddenly turned very negative.
Rob, what are your thoughts? Obviously, Julian Roberts being given much of the credit for the turnaround story that Paul is referring to.
Yes, well, it was a near-death experience. Debt was a real big problem for them, and they've had to, over time, eat away at that debt, which they have done very well. Also, their Scandia deal also blew them out of the water slightly in Europe. We saw margins in Europe falling away aggressively, and slowly that's starting to come back. So they managed that business well. Then the US business, they sold off a lot of that US business, but now they're left with the core part of that business, which is really good. So yes, they've weathered the storm very well. And just out of their pure size, at least in a South African's perspective, you know, they've got really good assets now, and they've also got the bank in South Africa where they've got Nedbank as one of the assets which other insurers don't have. So I like it as in total, and a good looking share going forward as well.
Paul, potentially, even if you take out the recent downside from a share price perspective, potentially is there much more upside in this stock though?
I think there is. I mean, they are rolling out their business model elsewhere in Africa. So they are looking at a new subsidiary in Ghana. They bought something over there. They're working with EcoBank in Nigeria. So they want to do exactly there what they did in South Africa over the period of 100 years, which is find all the people that want life insurance, offer them investment and savings products, recruit a broker network of people to go out and sell their products. I mean, you know, I don't really know what I can say about these guys except that, you know, they do what they do, they aggregate money and they make big fees from looking after money in a safe and reliable fashion for smaller investors, which is not a bad thing because we know people must save for their future.
It was a bit of a shock to the market when they did have that near-death experience. Where were you at that time in terms of saying, should you be buying Old Mutual or not? Come, I want disclosure here.
We probably looked to buy it at around 10 Rand, and then it went to 6 Rand. So,
you didn't buy more at 4 Rand. You didn't
so
buy
4
more.
Rand, we were already in at 10 Rand, so we just held out, and it came right for us, that trade. But it was very difficult to buy it when it was at 4 Rand 30.
Where were you when it was at 4 Rand 30?
I used to be having a fun time making jokes about the fact that its share price traded at less than £1 in London. So when people asked me what my favorite penny stock was, I used to say Old Mutual.
Did you believe that it was going to go belly up?
No, I didn't like them then, and I'm not particularly big fan of the industry now. So we've missed the entire fall down and the fall up and the recovery and everything. We've been watching from a long, you know, a disinterested perspective for the last 10 years or so.
Are you at all excited about the industry?
I think the industry is fine at the moment, or carry on giving you returns, but it's not exciting at the moment. Africa, they're all moving into Africa, and maybe that's where we'll get some growth.
Who has the biggest traction in Africa?
I think Sanlam actually has got a very big traction in Africa. Nedbank has got with EcoBank, and Old Mutual's backing onto EcoBank as well, so they're going through. Stanlib as well, you know, they've gone into Africa because they're all starting to go.
There's nobody that you can say has really the first move advantage consolidated on the African continent, or can you?
Not from my knowledge, no. Maybe the network of the banks, so if you took MMI, they could back off on First Rand in Africa or Stanlib. Stanbic is very big within Africa, so there's a platform maybe for Stanlib. But I'll say everybody's moving more or less at the same time.
What about that London listing on Old Mutual and the big head office? Is that necessary?
Yeah. No, I don't know about that because you're right. Pinetown seems like, not Pinetown, Pinelands in Cape Town seems a perfectly adequate place to have a head office.
I thought I'd missed that whole expansion into Pinetown in KwaZulu-Natal.
So why didn't they just stay there? Look, they had great ambitions, and that's when they went and bought Scandia and they bought the asset management business in the US, which
But
was
they've still got their head office in London.
Yes, because that's where they are, and so you got to ask yourself, because for a while it looked like people would say we like the emerging market characteristics of Old Mutual. And then the people in emerging markets here would say we like the global aspirations of the group. Now that it's neither fish nor fowl, the reason it's fallen there is partly because markets are weak, but partly because the attraction of emerging markets is waning, as you know. People are out
So
there
then now they're going to
ascending.
like now the head office in London is actually the best asset because they can use that to market their story.
Remember, they don't have a big presence in the UK market per se. They are an emerging market entity listed in London in order to access London capital markets.
Well, it could give them that
Reporting in
access now
pounds
again
and
to
so on
the
and so
UK.
forth. So I don't know. I mean, to me, though, one mustn't underestimate the ability. The assets under management are actually now higher. You said 380 there. At the current exchange rate, the numbers are more like $430 billion. So they've got a big pot of money to look after, and that just spits up, annuity revenue reporting period after reporting period.
Nice business model there. Hot or not on Old Mutual, Rob?
I'm hot on Old Mutual.
Hot or not, Paul?
Look, this is difficult for me because, like I said, I'm not a big fan of the business model, but I know that the markets have been depressed in recent weeks, and I think that's untoward and isn't correct. So on a short-term basis, I think it is hot.
No. Those rules don't apply. Hot or not, no short-term clarification at all
No, for
allowed.
now, it's hot.